digit growth in both the segments, that is crop care and seed segment. Operating margins improved up to 15.7% versus 12.3% in the same quarter last year. This is supported by the volume-led growth and the moderation in fixed cost for the quarter. The stock is currently trading at around 38 times to FY27 earnings. We are positive on the company, and we will provide further updates from the today's con call. Thank you.
Good morning, everyone. Couple of results and con call updates. HCL Tech revenue numbers were in line with street expectations. However, the deal TCV and margins were subdued. Revenues degrew by 0.8%, while margins came in at 16.3% versus expectation of 17.2%. So for the quarter one, the total net new TCV came in at around $1,800 million, which was below the guided range of $2 to $2.5 billion by the company. And there were two large deals which company could not include in the TCV, and it believes there will be a decent uptick in the TCV number in the second quarter. And the company also expects strong ramp up in these deals, which is why it has raised the revenue guidance for FY26 to 3 to 5% growth. However, the company has also lowered the margin guidance by 100 beeps to 17 to 18% range on the back of investments expected in the AI technology. So this can keep the profitability under pressure. Management, though, has cited stable business environment and has not seen much deterioration. So overall outlook for HCL Tech would be long-term positive. Secondly, Tata Technologies reported numbers which were broadly in line with the street expectations, wherein the revenues have degrown by 4.6%. Street was expecting a degrowth of 6.6%. EBIT margins dropped 210 basis points quarter on quarter to 13.6% versus the expectation of 14.1% on the back of lower revenues. So during the con call, management sounded upbeat and have indicated growth coming in Q2 onwards with deal pipeline, which is better than a year ago. So overall outlook for Tata Technologies is positive. That's it from me. Thank you.
Good morning. Ola Electric posted the result. Company's revenue grew by 36% quarter on quarter, but declined by 50% year on year. EBITDA grew on quarter basis. Company's loss declined on quarter basis. We also attended a con call of Ola Electric, so company gave some future guidance. Company is targeting 3,25,000 to 3,75,000 units in FY26 and aims to generate revenue of 4,200 crores to 4,700 crores. With PLI benefits expected to begin from quarter 2 for the Gen 3 product portfolio. Gross margin is projected to rise to 35% to 40%, and the company anticipates full year auto EBITDA to exceed 5%. It also expects the auto business to remain EBITDA positive from quarter 2 onwards. The auto business is expected to turn free cash flow positive by end of FY26. And the Gigafactory, the battery cell plant, will scale from 1.4 gigawatt to 5 gigawatt by FY26 end. Even without PLI benefits, it is expected to break even at 3.5 gigawatt to 4 gigawatt capacity with 80% yield, with break even target in FY27. So the overall outlook for Ola Electric is positive. Thank you.
Yeah, and I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, in today's session, we might witness some profit taking in gold and silver. Gold prices are expected to test 97,600 to 300 levels on lower end. So, selling around 98,000 with a stop loss of 98,300 is recommended. Though from 97,000, one can initiate a buy for a pullback with a stop loss of 96,700. Silver too, one can sell around 1,13,700 and maintain a stop loss of 1,15,000. On downside, 1,12,000, 11,000 are the levels where one should take profits. Though prices are supportive at 1,10,000, one can initiate a buy around 1,11,000 with a stop loss of 1,09,700. And in metals, copper, one can expect prices to test 875, 872 levels on downside. So selling on rise with a stop loss of 887 is recommended. And zinc, one can sell at 258.50 with a stop loss of 260.50. And on downside, expecting 255, 254 levels. And crude oil, we are expecting prices to test 5,700, 56.50 on lower end. So selling around 58.20 with a stop loss of 5,900 is recommended. And natural gas, some pullback is expected. So buying on dips around 294 with a stop loss of 285. And on upside, 308, 310 are the levels where one should book profits. That's it from us. Thank you very much.